investing can help your capital grow substantially in the long run. They are expected to grow at a rate faster than the market average. Shocked? Stay with me till the end of the video and I will tell you everything you need to know about growth stocks and how to identify them. Hi everyone, I am Prarthana from Clio. We are India's largest tax and financial services platform where we have served more than 6 million tax filers. Do subscribe to our channel to get investing tips and learn more about growing your money. In short, growth stocks are stocks of companies that are expected to grow at a much faster rate than the average market. Although growth investing could boost your capital substantially over the long haul, there is an inherent risk associated with investing in them as well. Now, let us have a look at some of the benefits of investing in growth stocks. Firstly, higher returns. As mentioned earlier, growth stocks can generate higher returns on your capital than the market average. Stocks that fall under this category can help your money grow in both long and short term. Next, beats inflation. Traditional investing options barely beat inflation, hence the money loses its value over time. However, investing in growth stocks can potentially beat inflation. Several financial experts are of the opinion that the actual growth of your money is the growth rate subtracted by the rate of inflation. This means that if the inflation is rated at 5%, your money should have grown beyond 5% to retain its buying power. Growth stocks on most occasions are known to give returns far beyond the rate of inflation. As the age-old saying goes, with great risk often comes great reward. This is the case for growth stocks as well. Although it has the potential to generate exponential returns, it also comes with inherent risks. Typically, companies that have a growth strategy would be aggressive and employ higher risk strategies to reach their goals. Furthermore, growth companies do not give out a dividend and they reinvest their profits into propelling growth. Lastly, growth stocks are also issued by smaller companies that are in growing stage that have not proven growth yet. This makes them volatile and more susceptible to the market conditions. While they can help make big money when market conditions are favorable, it can cause major losses when the market conditions are adverse. Did the explanation make sense so far? If it did, write clear in the comment section below. It has finally come time to understand the characteristics of a good growth stock. Let us get right into it. Firstly, strong leadership. One of the most impressive qualities of a growth company is its ability to rapidly increase sales and profits. Having the foresight to achieve aggressive goals require an innovative group of leaders. Without this, the expected growth may not happen. Therefore, it is essential to understand the leadership team of a company is strong enough to achieve desired results. A promising growth industry. Growth companies that plan to grow exponentially should ideally be in industries that grow or have the potential to grow exponentially as well and perhaps already in evidence. For example, today may not be the best time to invest in a personal computer, that is PC hardware vendor, but it could be the right time to get into electric mobility. Commanding market share. Market share is a company's total sales relative to the total sales of its industry. It is imperative to invest in companies that have a commanding market share. This translates to growing revenues and is also an indicator of how competitive a company is compared to others in the industry. It may not be a great idea to invest in the third or fourth player in an emerging growth market. Strong sales growth. Another key factor to look at before investing is a company's sales. Look for companies that are booming in the growth of sales, revenue, and earnings. The faster the growth rate, the greater the likelihood that a stock's price will rise. A large target market. Companies don't grow by selling a niche product to just a handful of customers. They tend to experience good growth by selling to a large target audience. The bigger the customer base, the greater the opportunity for growth. For example, a company that caters to their goods and services to both men and women has the potential to fare better than a company that caters to only men. So folks, I hope you enjoyed watching this video as much as I did telling you about all the growth stocks. You can start your investing journey by downloading the Black app by ClearTouch from the link given in the description box below. Download the Black app to help you grow your wealth and invest wisely. Also, don't forget to subscribe to our channel for more finance related content. See you soon. Take care and goodbye.